With the global economy still reeling from the GFC and uncertainty gripping the US political landscape, investors are once again flocking to the relative safety of bonds. Yet as bond markets respond to an increasingly spry equities market, it's clear not all bond funds will have the dexterity to respond to fast-changing market conditions. In part 1 of this Legg Mason video series, we speak with Anthony Kirkham, Head of Investment Management at Western Asset Management, to discuss the outlook for the local bonds market and why an active bond fund remains a supreme investment vehicle to keep pace with today's rapidly changing investment environment.
Yeah, there's certainly been a lot of optimism in the global markets since the election of President Trump in the US, and we've seen certainly a response to that in across the board. Certainly equity markets have been off to the races since the election, and you've certainly seen bond yields moving higher. In fact, prior to the election, but also certainly post the election. I think it's important to remember though there's still challenges in the world. Clearly QE is still running, so therefore markets are still being manipulated across certainly many regions, Europe being one of those, certainly the UK, and of course in Japan, where the Bank of Japan's actually goal is to keep the 10-year bond yield at 0%. So there's certainly still challenges out there, and clearly markets are buoyed up by some positivity, but we need to remember there's still that manipulation going on. Therefore, for Australian bonds, they do look actually relatively attractive in the global sphere. Obviously at 2.8%, the 10-year where it is currently sitting is attractive relative to those other markets where a Japanese bond at 0, a German Bund at 40 basis points, it certainly stands out. And so there will be capital flows that still come to our market here. The outlook for Australian bonds is actually reasonable because currently we've got a running yield around 3% in the bond fund. We think that the market's now factored in this growth story, so the bond yield curve has moved. The fact that we don't expect the RBA to be tightening monetary policy anytime soon, we think a type of return around that level will occur this year within bonds, which is actually reasonable. Of course, if we have some sort of misstep in the globe, then clearly the return's going to be higher than that. So we think there's a reasonable return for the type of risk that you're taking within the bond space. The investment philosophy for the bond fund is exactly the same as what's used by Western across the globe. It's a tried and tested investment philosophy that looks at long-term fundamental value within the asset class, and also having diversified strategies within the portfolios to capture value in the most risk-efficient manner. Obviously, we're very pleased to have that highly recommended from Zenith and Lonsec. The bond fund actually does provide some very strong benefits. Obviously, it has that regular income aspect to it on a monthly basis, but importantly, it actually provides the defensive characteristics that you're looking for within a bond fund. So it's obviously broadly based in terms of its allocation, and it provides those correlation benefits that you're looking for relative to risky assets during times of stress. I think it's very important to be active in your fixed income allocation, and partly due to the type of broad market that we're focused with. If you look at the benchmark today, it's changed considerably over time, certainly since the crisis, because the makeup of it has adjusted as governments continue to issue more and more bonds. And so what was had a government bond allocation around 20%, it now has an allocation around 50%, and there's no reason for people to hold that magnitude of government bonds just because they've been issuing a lot of bonds into the marketplace. So being active is key, and then actually having diversified positions, having that broad focus is really the benefits of holding a trust like this. Yeah, the fund's certainly performed very strongly. In fact, we're very pleased that it's reached its objectives of the fund, which is to outperform by around 75 basis points, and we've done that over the life of the fund. We've also done it in a risk-controlled manner, in fact, inside the risk parameters that we describe within the trust. So from that perspective, we're very pleased with our performance. and we're obviously looking to achieve that going forward. The real strength for Western Asset is its team-based culture, and obviously within fixed income, where you have very broad issuers across the globe issuing into markets, having that strength and ability to call on resources across the globe to assist with the decision making is really key, as well as understanding capital flows within markets, which has certainly been driving markets over recent times, and I suggest will be the same going forward. So having that resource, certainly making decisions within the Australian Bond Fund, is really key.
Thank you for watching part 1 of 3 of this Legg Mason video series. Tune into part 2, where we'll traverse the challenges and benefits of income investing for those approaching retirement.